Hello viewers, we'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. In this video, we'll be going over the day-by-day probability model, the percent comparison, and how we find the models, and the day-by-day forecast for gold miners. So back to the technical analysis. Today we're up 16% on the 1 hour chart. We are currently overbought on the 1 hour RSI. If we expand out to the 4 hour chart, we are approaching to positive MACD and we are nearing overbought RSI. And on the daily chart, we were oversold last week back in March 11th and March 12th, and we see a nice reversal in gold due to the Fed continuing quantitative easing, causing prices of silver and gold to climb higher and the price of dollar to decline. So in this reversal, if we do manage to see a continuation of it, the next resistance that I see is where we made a daily support back in March 11th, slightly above the 18-day moving average, this purple line, and that resistance is roughly around the price of $33.45. And as for support, if we do reverse and head down lower, the next support that I see is the 9-day moving average, this blue line. And we see a price concentration around that range as well, and that is around the price of $26.70. So if we were to move up higher, that price movement is roughly around 6.3% to the upside, and to the downside it is around 14.5%. back to the 9-day moving average. So back to the day-by-day probability model as the days progress to the 7th day. On the 7th day, we have a 50% chance for gold miners to climb higher between 0 and 9%. On the extreme case, we have a 29% chance for gold miners to climb higher between 9% and 19%. On the other hand, we have a 21% chance for gold miners to fall lower between 0 and 9%, negative 9%. So let's look at the day-by-day forecast for gold miners. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match, and this trend dates back to July 13th, 2011 to October 6th, 2011. So let me point out why these two charts are similar. So what we have here in the current trend, we start off at the upper Bollinger Band, and then we proceeded. Let's just mark all the instances where we do touch the upper Bollinger Band. So we have our second one there. And next, let's mark where we touch the bottom Bollinger Band. So we have one in between two upper Bollinger Bands. Next, we see it decline further towards the very end. And finally, we see a reversion to the mean or back to the middle Bollinger Band. So we have those price movement right there. And let's change it to blue. So we have those points there, and in the trend in question we start to see a similar pattern here as well. We start off touching the upper Bollinger Band, and we have our second one here, and in between them we do touch the bottom Bollinger Band, and then afterwards we mark another instance where we do touch the bottom Bollinger Band, and lastly we see a reversion to the mean right towards the very end. So we have those points there. So what we have is 1, 2, 3, 4, 5 points, and on the current trend we also have 1, 2, 3, 4, 5 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was July 13, 2011 to October 6, 2011. Back then, gold miners remained flat around 11 basis points. So we may encounter sideways price action next coming days. And if we examine further on the percent comparison, so if we examine, say, let's expand out further, and we examine the current trend, right here we have the current trend. We are down 48% from monthly high, up 27% from monthly low, and up 11 or 12% from 10 simple moving average, and down 8% from 20 simple moving average, down 20% from 50 simple moving average. And the trend that we just examined was right here, down 32% from monthly high, up 9% from monthly low, up 3% from 10 simple moving average, down 8% from 20 simple moving average, and down 14% from 50 simple moving average. So it's quite fairly in sync of where we see in the technical performance for gold miners. And if we examine in the standard deviation, we see it lie on this 50% chance for gold miners to climb between 0 and 9% in the next coming days. So again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.